Today we're going to be investing in real estate, and I have a great way to do it that's an alternative method, and I think that you're going to find this video far fascinating and greater than anything out there right now. So I've heard a lot of people investing in real estate the conventional way, where they go out and they buy a house or a multi-unit property and they go ahead and fill it with renters, hoping that those renters are going to pay you every month. Now with this method, we're going to find that's far more passive, very easy and simple to get along with, and you're going to still have great returns, if not greater, after a certain amount of time. So we're going to go ahead and do a dividend reinvestment calculator. I have it here on the search, just ready to go. And we're going to click the first one that pops up here. This is by TipRanks. I'm not affiliated with TipRanks at all. I'm not getting anything from them at all. So I did sign into my Google account just to get started, so it might ask you to sign in, and that's go ahead and do so, and this will allow you to use our calculator. Now the reason I like this calculator is it has a lot of options for us to change around things and play around with what we might expect to find from our dividends and our reinvestment. So starting off, looking at this site, we can search for a dividend paying stock, and I'm going to choose ARR, which is ARMOR Residential REIT. An REIT is a real estate investment trust that pays out 90% of their earnings as dividends. So you're going to be earning all of this money from someone else's work. It's going to be very passive, very easy, and it's really only going to take a one-time purchase to get involved. You're not going to have to deal with a realtor. You're not going to have to potentially deal with a bank and finances, getting your financial information together, all the paperwork. You're not going to have to deal with a bidding war for the property. You're not going to have to deal with a management company if you're not going to want to manage the property yourself. And those individuals can eat into your cash flow depending on how things work out. Whether you're paying for points or going to have someone manage the property like snow removal or cutting the grass. And you're not going to have to worry about the upkeep of your property. So with ARR as just one simple example of a real estate investment trust, we can go ahead and play with some numbers here and find out with some simple investment amounts that we're going to invest to start our account, how much we're going to actually see as a return. Now with this calculator, they have a drip enabled and a non-drip enabled option. Now what DRIP is a dividend reinvestment plan. So it's going to take all of your dividends that you have received and reinvest it by buying more stock to kind of snowball your dividends into a much larger gain and return after a certain amount of time. So we put in ARR. You can do this with really any stock. It's going to calculate the share price, and this is pretty much real time. That's what I really like about this calculator. And we can go ahead and change our investment amount to say $20,000. Now I'm going to put $20,000 down because that's kind of like the conventional 20% down for a single family home within the conventional realm. So when I did my calculations, I was going to be earning somewhere around $350 to $500 a month after rent and everything like that, and the mortgage. And that was without a management company that might actually eat, say, $100 to $200 a month. That might be to find the renter and to accept the payments and do some upkeep on the property to make it look good. So the great thing about ARR is it's actually a monthly distribution frequency, and they already put in here the expected dividend yield. Now I know that this is a forward-looking yield. We're going to go ahead and put in 18.9% just to be a little bit more accurate for today's numbers, and we can keep the holding period about 10 years. We're going to start by calculating the returns without DRIP enabled, just to show kind of how beneficial it is to reinvest these dividends to get you a massive snowball account at the end whenever it is that you decide that you want to cash out, or potentially just live on the dividends after it grows to a certain amount. So we're going to do this without taxes because, as I understand, the taxes are going to be taken into account based on your tax bracket, and so for each individual it's going to be a far different solution and situation. So we're going to go ahead and calculate my returns without DRIP enabled. We're going to see that our end balance should stay about the same, and this is based on the share price. That might fluctuate down, it might go up. Hopefully it goes up so that your account would actually have a higher end balance. But you can see that the annual dividend income is around $3,780. So this is going to be every year that you're taking in $3,780. So total dividend payment of $37,800 and a yield on cost of about 20.63%. Now this is fantastic. However, we're going to find that it gets even more fantastic, well over $57,000, when we actually invest with the DRIP. So it's going to create the compound effect, which, as we know, Einstein said that there's no greater power than compounding. So we're going to go ahead and calculate my returns and see that it's well over $57,000. That would be the total amount that we earned over the years of 10 years and the end balance from the last example. So we see our ending balance now is $130,000, a total return of 552%. And now we're making about $22,000 a year without taxes taken out, keep in mind, every year. So if we change this to a holding period of 11 years, we're going to add another $22,000 to this end balance. We can go ahead and calculate to show you that that in fact is what happens. And in fact, our annual dividend just continues to increase. So if we hold on to this for 20 years, calculate with the DRIP enabled, we're going to see that we're going to be making $145,000 every year at the end of 20 years. And the end balance is around $850,000. So for each year you hold on to it after 20, you're going to be making over $145,000 not adjusted for taxes. Now there are some stipulations that are going to be taken into account with taxes and maybe some ways around it, like if you use a Roth IRA. However, if you use a 401k or just a traditional account for investing, you should see that this number will not be quite as high because taxes will be taken out. However, that might be expected to change as this forward dividend is somewhere around 22%, which is far greater than this 18.9. But just for the example here, to keep things a little bit more conservative, we're going to leave it with 18.9 because that's what it's currently at. So let's say we have a larger investment amount that we can play around with. Let's say we got an inheritance or a couple of gifts or someone near us won the lottery. We can go ahead and put in $50,000. Now, this might even be if you were going to get out of the real estate market yourself. Whether it's selling your current home or selling a rental property, you can go ahead and do an investment amount of $50,000. And we're going to hold on to this over the beginning example of 10 years. When we calculate our returns, we're making that money back after 10 years each year. So $55,000 is coming back to us each year in dividends, not adjusted for taxes. And our end balance is over $326,000. So this total return of 552% is just fantastic. We have a yield on cost of 134%. So we are definitely making a good chunk of money here. And if we hold on to this for, say, 20 years, with DRIP enabled, we're over the $2 million mark after 20 years of a $50,000 investment. And this is going to be passive. You might want to check the share price to make sure things aren't crashing, but basically, this is all passive. They're going to pay out the dividend, it's going to reinvest into your plan, and continue to grow your end balance. And annually, after 20 years, each year after that will be $360,000 or more as it continues to grow. So let's say after 20 years, you decide that you don't want to invest those dividends anymore and you just want to cash out and take $363,000 every year. You can certainly do that. Now, the crazy thing comes in when you take it for 30 years in your account without touching those dividends. As you let those reinvest into your account, you're going to see that when you calculate your returns, you have an end balance of over $13 million. That's a total return of over 27,000%. And each year after 30 years, you're going to be making well over $2 million each year just from your dividends and just from your purchase. So for those that have a decent chunk of money that they can invest into the stock and just hold on to it and not need to access that capital, this could be a great, passive, easy way and not have to worry about inspections, not have to worry about financing, not have to worry about renters paying their rent or a management company chasing after your renters or evictions. You can just worry about collecting your $2 million each year. Now, for those that want to invest in, say, something like Coca-Cola, you can certainly do so. We're just going to find that this investment amount at $50,000 and the holding period at 30 is just not going to return quite the same yield that we had before. It's going to be around $120,000. And so that's why I really like these REITs, these real estate investment trusts, is because they pay out 90% of their earnings as dividends. So you're going to be making far more, and with the share price being far lower and a monthly distribution, you're going to see that your payment is going to be far greater. With Coca-Cola, you're making around $3,000 every year after 30 years. With ARR, or we could even do another REIT that pays out a monthly distribution at $50,000 investment amount after 30 years, you're going to see that your end balance is close to $18 million and you're still making over $3 million each year with a total return of 35,000%. Again, this is not adjusted for taxes, but for those that have a large chunk of money, or even those that do not have a large chunk of money, you can see that with a dividend reinvestment, you can see far greater returns as this compounds. So for those that have, say, a $2,000 investment amount, they can hold on to it for a long-term period of 30 years at the current expected dividend yield, and this is for Orchid Capital, of 19.77 with DRIP enabled and not adjusted for taxes. A $2,000 initial investment without anything else added annually for contributions or monthly for contributions, it's going to yield you close to $1 million. It's going to be around $717,000. Now, this is a great way for those that don't have a large income right now or are struggling to find ways to invest, or maybe you have a long-term period that you can go ahead and make some money by working if you're young right now and you have some change lying around, that you can go ahead and put this into an investment account and let it grow over time without you having to do anything to manage it yourself. So the great thing about this is that I'm going to put ARR in just because I really like that stock for the share price being a lot lower. We'll go ahead and adjust this to 18.9, even though it would be far more fun to put it at 22%. And a monthly distribution frequency, our end balance is over $500,000. So if you were to ask me if I would take $2,000 and have $500,000 after 30 years and not have to worry about my retirement, I would gladly do so. And if we could adjust that to say $20,000 and hold on to it for 30 years, you're going to have over $5 million. And that should definitely adjust for inflation, and it should definitely take care of any sort of capital needs that you would have in retirement, as you're going to be making close to $1 million each year. So close to $100,000 each month from just a one-time simple purchase of some stock and then just waiting on it. So I hope you guys liked this video today. Go ahead and hit the thumbs up if you did. Let me know in the comments what your favorite part was, if there's any stocks that you guys really like, what you think of this idea, how passive it really is, and if it's far easier than getting involved in the traditional real estate market. Thanks for watching. Hope you guys enjoyed, and good luck with your stocks.